Hi everyone, welcome to this time scrolling finance. Well, last week was a peaceful week. Few inflation data came out, but in the weekend, so it didn't influence market much. And the bond yield curve had a structural change. So as always, let's have a review of the bonds market, then check out details part. Alright? Total bond yield curve was twisted and steep compared to the week before. Yields of 3, 5, 10 years terms went down 3, 2.3, 1.7 basis points. And the 30 years term went up 1 basis point. If we compare to the one of December 9th last year, the curve was still twisted and flat. Yields of 3 years term went up 3 basis points. 5, 10, and 30 years term went down 4, 23, and 16 basis points. The spread between Chinese treasury bonds and commercial bank perpetual bonds was almost unchanged, with 5-year spread was 45 basis points. About actions of investment agencies, last week, for short and middle-term bonds, big banks and policy banks bought 73 billion yuan together. City commercial banks and joint stock banks sold 120 billion yuan together. And for long and ultra-long-term bonds, funds bought 10 billion yuan, whereas city commercial banks and joint stock banks sold 31 billion yuan together. Next, let's check out details part and see what happened last week. In terms of fundamentals, first inflation data came out. CPI was 0% and the PPI was minus 3.6%. While CPI was weaker than previous one, 0.1%, but better than expected one, minus 0.1%. Whereas PPI was the same as the last one and worse than expected one, minus 3.4%. The anti-convolution policy definitely puts up prices of industrial materials and energy prices, but there is a period of time from policy being published to show its effect. So we may see PPI increasing in the next few months. Next, Treasury Department published a statement said that starting from August 8th, new issuing government bonds will resume the collection of value-added tax on interest income. This action will make new bonds and old bonds validate its yields in a different way, and perhaps make the old bonds more valuable. Third, after a week of adjustment, the SEC Composite Index has backed to increasing turnover. And by the assistance of a bunch of stimulated policies, the index has great odds of breaking through its last maximum of 3,674. Fourth, the Sweden negotiation didn't make a great progress. The elevation time has been extended to August 12th. So from long and ultra-long terms view, the main clue of bond investing may back to fundamentals, and which are now still with the long side. But I have to say that under the great pressure of the performance of the stocks market and the continuing new supportable policies, the long and ultra-long-term bonds may face more pressure of losing trading gains. For funding condition, well, last week the funding environment was pretty loose. The financing price hit the new minimum of 1.25% for overnight, and the PBOC totally invested 164 billion yuan liquidity to the interbank market. Furthermore, there was a rumor said that the bid rate for bailout reverse repurchase down 5 basis points than before. So the funding condition now is at the loose vibe for both price and volume, which definitely shows a loose and supportable attitude of the PBOC to the bonds market. So from short and middle terms view, the short and middle terms have more stability and trading gains than other terms. And what should we pay attention next? First, with the positive economic situation and the loose funding condition, the bond yield curve may change its shape. Be careful of this. Second, next week will be tax season again, so watch out the funding condition. Third, the probability of treasury bonds purchasing seems increasing, so the trend is happening in short and middle terms. Fourth, the elevation time will end in August 12th, so what will Trump do after that? Let's wait and see. About bond investment strategies, the short and middle terms have more value with no doubts. It is a good time to increase short and middle term bonds as base positions. Besides, for long and ultra-long term bonds, it is not a good time to buy more. We should follow the trend and certainty, which now happens in short and middle terms. So as always, if you want to know more useful finance information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding, experience, and waiting for you. So bye guys, until next time.